I'm going to preface this next 20 minutes of me talking shit about Biden and the Democrats with the fact that Republicans are equally, if not more so, hypocrites when it comes to federal spending, the budget, the deficit. Like, I'm so sick of Republicans who I used to vote for pretending like they care about the economy, that they care about deficit spending, that they want to drop the deficit, that they're the party of conservative spending. And then they get into office and they spend money like drunken sailors, just like Democrats do. It's disgusting. And it's almost, in a way, more reprehensible and more hypocritical than the Democrats. At least the Democrats, you know who they are, right? They're like, hey, we want to tax and spend. We want to tax and spend. We want to tax and spend. We think we can socially engineer a better United States. We think we know better than the other political party, or frankly, our couple hundred representatives in Washington know better than you, the taxpayer, and you, the individual, than you know for yourself. So we're going to tax as much as possible and spend it on as many programs as possible. In some ways, I think that's even more noble than the Republicans who claim to be the party of fiscal responsibility, and then they get in and they are never fiscally responsible. So let's start with that, okay? The one thing that I will say, and this is going to be the first time I quote myself on this podcast, because I think I wrote a pretty great Facebook post that got shared several dozen times and has gotten a lot of comments on my personal page and in the On the Edge podcast Facebook group. By the way, shout out. If you agree with me, disagree with me, shout out, not a shout out, request. Whether you agree with me, disagree with me, I want to hear from you. So join the Facebook group, facebook.com/groups/On the Edge podcast. Or just search
or comment on this video so YouTube's algorithm knows we exist.
There we go. Chris, always plugging the YouTube channel. But that's my problem with the Republicans. The problem I have with the Democrats is their answer is just always more, right? Because why wouldn't it be more? If you think you are morally and intellectually superior, if you believe in social engineering and effectively modern day Marxism of like, you know, from each of their means to or each of their ability to each of their means. If you believe you can just tax us and spend us into this kind of ideal utopian society, why wouldn't the answer be more? Like eventually your goal is to repossess 100% of everybody's income and redistribute it in a way that you see fit. And so this is directly from Biden's new tax plan. And I will tell you, I started with the Tax Foundation, which is a nonprofit. It is a .org, but I know from previous reading that the Tax Foundation is a little bit of a right-leaning think tank, just like the Rand Institute, I would argue, is a little bit of a left-leaning think tank. Doesn't mean they're wrong. And the good news is when the Tax Foundation or the Rand Corporation or whoever analyzes these bills or the Congressional Budget Office or whatever, you can always go to the underlying document to fact check, which I did with much of this. So we'll link to the Facebook post and we'll also link to this article that kind of gives you the long form explanation of what's going on with the tax plan. And it gives you links to everywhere in the tax plan if you actually want to confirm that. So let me take a big drink of water here and just read a little bit. All right. So the highlights of the Biden tax plan that's probably going to pass this week. We're recording this the week, what is the date today? We're recording this the week of the 27th. It is a big week for Democrats and for Joe Biden. They're going to try to pass this spending bill. They're going to try to pass an omnibus reconciliation budget package. They're going to try to pass the $3.5 trillion infrastructure bill. It's a big make or break week for Democrats. And here's kind of what's on the table from Joe Biden and the Democrats. All right, federal tax bracket up to 39.6%. That means for every dollar that you make over $628,000 a year, 39.6% is going to disappear to the federal government in taxes. Now, I wrote here, I get it, it's a big number. Anyone making over $600,000 a year is likely working hard, and they were lucky, and they have benefited greatly from being born in, working in, growing a business in, using the infrastructure of America. But, I said, do you see how this works? First, Elizabeth Warren and Bernie Sanders and Joe Biden and Kamala Harris, they vilify the evil billionaires who don't pay their taxes, even though that's a lie. Rich people pay a lot of taxes. I could bore you to death with stats and graphs and whatnot, but basically the top 20% of earners in the country pay a little over 50% of all federal taxes, and the top 35 to 38% of taxpayers in America pay like 99% of the taxes. So billionaires and millionaires pay a shit ton of taxes. Okay. Then they start to redefine this as like, well, it's not only the billionaires that are getting over, it's the millionaires that are getting over. And then the millionaires somehow become people making over $628,000. And then it becomes people with investment portfolios over $1 million. Then it becomes people that have combined net worth or income over $450,000. And pretty soon, as we'll see in a couple slides, it's basically anybody that makes over $600 a year. So next, I believe, this is my prognostication, this is not in the tax bill, I think if Biden gets his way with this plan, they will end up, before he gets out of office, dropping the maximum taxable rate. So 39.6%. I think they will end up dropping that to somewhere around $200,000 to $250,000 and just say, hey, you know, if those evil people making $100,000 would just pay their fair share, everything would be fine. We would have money for all these programs. All of our problems would be fixed. There would be no homeless people. Education would be amazing. The military would be fully funded. But it won't be fine because, like I said, the answer for Democrats is always simply to tax more, right? Tax more, tax more, tax more. Okay. Now you couple this with the top tax rate of over 10% in several states like California, New York, like where I live in California. If you make over, can you actually look this up, Chris? What's the top tax bracket by income? I think it goes now to like 11.9% in the state of California. If you're making over, it's a big number. It might even be $1 million. Look up effective tax rates in California, state taxes. I want to say it's like 7% if you make over a couple $100,000, and it's like 12% if you make over $1 million or something.
I wish I had a way to send my screen over to you. 37% at $518,401.
No, this is California state tax, not federal.
Oh, okay.
Yeah, so California is going to be somewhere around the tax brackets. California state tax brackets are probably what you want to Google. It's going to be somewhere around, I think, like 12% over $1 million, 7% if you make over 250, something like that.
13.3 for incomes over $1 million, 12.3 from 572 to 999. And then 11.3 from 343 to 572.
All right. So if you're making over $300,000 effectively in California, which frankly is a lot of people, you're paying 39 point something to the federal, 11 point something to the state. They basically phase out most of your ability to write off tax deductions and save money. So effectively in California, you know, you start making over $300,000, $400,000, $500,000, $600,000. 50 cents on every dollar you make after that point is going to go to the federal government. Now, again, you could argue, or maybe you believe politically, that these people are super blessed and they should pay more, but the bottom line is they won't. Eventually, people will move to Nevada or Florida or Texas where they can shelter some of their income and not pay 7, 8, 9, 10, 11, 12% in taxes, right? And so just imagine if you live in a high tax state. First of all, if you're in a high tax state and you're making large income, you're probably not taking advantage of the social services that the state pays for. Second of all, you might be looking around and being like, dude, we got more homeless in Los Angeles or Austin than anywhere else, but at least Austin doesn't take 10% of my money to waste it on social services that clearly aren't serving society. And then just the thought of the government being able to repossess 50 cents on the dollar is pretty crazy, right? All right, so let's keep going here. Also, here we go. Increase to the capital gains tax. Now, this is interesting. Capital gains, for those of you that maybe don't understand capital gains, is I buy $10,000 of Apple stock, okay? 5 years later, I sell that Apple stock for $20,000. I have a capital gain, a gain on my capital of $10,000. I invested $10,000. I sold it for $20,000. I have $10,000 of gain. For most of the tax code, for most of history, the government has looked at that and been like, well, you probably already paid taxes on that $10,000 that you invested, and that wasn't really earned income from your job. So we're going to give that some favorable tax status called the capital gains tax rate. And that has fluctuated dramatically through history. But generally speaking, capital gains tax has been lower than normal income tax because the theory is you probably already paid taxes on that money before you invest it. And then when you sell it, if you profited, you have to pay taxes on it again. So we'll keep that tax rate lower. Well, of course, they're moving that tax rate from where it currently is, 15 or 20%, depending on the way that capital gains tax was earned, to 25%. So again, I make $100,000. I'm taxed on that money. I take some of that money, I invest it, and I invested wisely. Well, 100% of the money that I make is now taxable income at a rate of 25% under Biden's new tax plan. So you're really getting taxed twice. And keep in mind, if I invested $100,000 and I lost $100,000 because I invested poorly, maybe, I don't know, not so hypothetically, let's say I had $100,000 of Washington Mutual stock back in 2007 and Washington Mutual goes to zero, guess how much I get to write off as a loss? $3,000 a year. If you lose $2 million in investments, you can write off $3,000 a year on your personal taxes. But if you bought cryptocurrency and you made $2 million, you have to pay taxes on that entire gain, right? So if you start to think about like, wow, why does Wall Street try to rig the system? Why is there so much incentive for fraud in the investment world? It's because if you win, you have unlimited upside for the government to tax you on your winnings, on your strong investments, and you get this little tiny $3,000 tax write-off if you lose a ton of money. It's pretty disgusting. Now, the nonpartisan, although I will say they're a little right-leaning, Tax Foundation estimates that this new tax plan will drop GDP, that's gross domestic product, that's the sum of all the money that the country makes, by about 1%, which is a shit ton of money. It will decrease investment in capital stocks, meaning people aren't going to invest as much money in the stock market because they have to pay more in taxes. It will decrease the stock market investment by about 2.5%, will decrease real wages, money that people earn, by about 1%, and will eliminate 165,000 jobs, which is kind of a rounding error. Quite frankly, that doesn't even seem like a big deal based on the overall job market and the fact that the unemployment report every month has ranged over the last couple of years from like 400,000 jobs lost or gained per month to like several million jobs lost or gained per month. So that 165,000 jobs, kind of a rounding error, not a big deal. Now, this is one of my biggest pet peeves, the fact that people think corporate income tax is a real thing. And I got in an argument with somebody on Facebook the other day where he's like, what? You think the capital tax or the corporate tax rate should be zero? Yes, I think the corporate tax rate should be zero. And here's why. So as part of this plan, they want to increase the corporate tax rate. So corporation makes profit. They currently pay a 21% tax rate to the government. They also pay payroll taxes and they collect sales taxes. And like, if you're a corporation, you're collecting so many freaking taxes for the government, it's not even funny. And by the way, you're paying all the people who then pay income taxes on their income. So it's like corporations are the biggest tax scheme ever for the government, but still they want to raise their tax rate from 21 to 28%. All right, let's just do this thought experiment. All right. Let's assume for a second that our tax code isn't a total convoluted clusterfuck of a mess. And yes, I typed that. Our tax code is a total convoluted clusterfuck of a mess because it is. Let's assume that corporations actually pay that rate of 21%, which they don't because they have a million accountants and tax professionals finding ways for them to move their money and put it in Ireland and put their intellectual property over here and domicile this off seas and do this and take this tax write-off and use this depreciation. And there's not a single corporation in America that pays 21% tax on their earnings. They're supposed to pay it on their profit, but even that profit is dramatically depressed based on kind of all the tax tricks that are in the book. But let's pretend for a moment that all companies did their books ethically and honestly, and they didn't overutilize tax write-offs, and they were paying 21% taxes on their profit. Now, we raise the corporate tax rate to 28%. Do you really think Walmart, Costco, Amazon, Target, GM, Ford, Rite Aid, Walgreens, Nike, do you think they're going to just say, shucks, we really love Joe Biden. We're just going to make 7% less profit because we want to give back to the country? Fuck no, that's not what they're going to do. They're going to raise their prices by 7%, right? So if you walk into Rite Aid and you try to buy, I don't know, a package of Pepto-Bismol tablets because you're like me and you give yourself heartburn thinking about all this political stuff, and that little packet costs $12. And now Rite Aid has to pay an additional 7% of taxes on any profit that they garner from the sale of that $12 item. Do you think that A, they're going to keep the price at $12, Or do you think B, they're just going to raise the price by 7% to compensate for the new tax, right? And you see this. This is how inflation happens. This is why ice cream was, I don't know, 99 cents for 3 scoops when I was scooping it in 1993 at my first job at Thrifty's before they got bought out for Rite Aid. And now 3 scoops of ice cream is like $4, right? Because government inflation, more taxation, more regulation, higher cost of goods, it pushes up prices in the entire supply chain. And then our dollar doesn't go as far because products cost more. But as I said in this post, guess who doesn't care if the cost of Pepto-Bismol, the cost of my house, the cost of my car, the cost of a pair of jeans? Guess what group of people doesn't care if their cost of goods go up 7%? Rich people. Rich people don't care if they have to pay an extra 7% for a Louis Vuitton handbag. Rich people don't care if they have to pay an extra $70 for their $1,000 iPhone. Rich people don't care because they're rich. They have money. You know who does care if they're on a fixed income or they're making minimum wage or they're trying to feed a family of 4 with $40,000 a year? You know who does care if the price of gas or the price of a pair of tennis shoes or the price of milk goes up 7%? Poor people. Poor people. The people that Democrats claim they're trying to help are the ones that really suffer when you make it harder for businesses to do business. You make it more expensive for businesses to do business. And then if they're lucky enough to turn a profit, now you raise tax rates. That doesn't hurt wealthy people. That doesn't stick it to the man. That hurts people that make a limited amount of money. It hurts poor people. Same thing when it comes to minimum wage, right? Minimum wage at Walmart goes from $10 an hour to $12 an hour. Guess what? Walmart's just not going to say like, shucks, we're going to make $2 an hour less profit for every employee that we have working an hour of labor. No, they're just going to raise their prices. And again, if I walk into Walmart and the cost of milk goes from $5 a gallon to $6.03 a gallon because of the fact that now Walmart has to pay all their employees an extra $2 an hour, that doesn't really affect me. I don't really give a shit. My wife doesn't care. And I'm not even rich. I mean, I guess theoretically by my income, I would show up as rich on some graph, but I don't have like a ton of assets. I'm not rolling in money. But you know, if you're making over 50, 100, 200 grand a year, you don't really care if the cost of milk goes up $1. If you're poor and you're somebody that works at Walmart making minimum wage, and all of a sudden you're like, sweet, I went from $10 an hour to $12 an hour, which, spoiler alert, only like 4% of Walmart employees actually make minimum wage. That's kind of just something that Democrats say to rile up their base of rich people that want to feel sorry for poor people, but I digress. If those people going from $10 to $12 feel like, cool, I'm making more money, but then they go to Walmart to shop for themselves and they're like, but wait a minute, my cart full of groceries also costs $50 more every time I buy groceries, so I didn't really make any extra net money. Same thing that happens with corporate taxes, same thing that happens with minimum wage. All right. Also, a state tax limit is being cut. Now, I disagree with this more in principle than I do in like practicality, but let's go through it. The estate tax is getting cut in half. Currently, if your family, when your parents die, is worth up to $12 million, you don't pay any taxes on that $12 million that gets transferred from one generation to the next. That's getting cut in half to $6 million. Now, obviously, families' net worth of more than $6 million doesn't affect a whole bunch of people. However, if we're just looking at this from like a first principles of like, how do I think about estate taxes? It's crazy because think about this. Let's say your parents had good jobs, white collar jobs. They made a couple $100 grand a year. They were taxed on the money when they made it. Then they bought some real estate. They bought some investment properties. They invested heavily in their 401k. They put some money aside in the stock market. Well, guess what? When they sold the stock or when they took the dividends and interest out of the stock, they paid taxes on that. If they sold a piece of real estate, they paid taxes on that. During the entire time they owned the real estate, they paid real estate taxes on that. They paid sales taxes on the money that was left over that they spent. So anybody who's accumulated $6 million in wealth has paid taxes, and then they've 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 invested money and they paid some more taxes. And now if you end up with a pot of money left over after all of that and you decide to leave it to your kids, And if it happens to be worth more than $6 million, and that includes cash, investments, net value of property or real estate owned, oh, well, now the government wants to tax it again. And again, this doesn't affect me. I don't have anybody in my life. I don't have parents. I don't have a rich uncle who's going to leave me more than $6 million. This is not taxes that I'm ever going to pay, but I can be sympathetic to the principle, even if it doesn't affect me personally. And it's like, well, if you created a bunch of wealth over your life that you presumably paid taxes on at some level or another, and now you die and the government wants to tax it again, crazy. Another thing that I really hate here, there's a few more points in here, but I don't want to belabor this anymore. They're going to make it harder to contribute to Roth IRA conversions, self-employed people who want to contribute to Roth IRAs. And by the way, the difference between a regular IRA and a Roth IRA is a regular IRA or a regular 401k. You put money into that, you get to avoid paying taxes now. But whenever you take the money out, you have to pay taxes on it. For those of us like myself who think that taxes are always going to be higher in the future because Democrats are going to win more elections and they always want more tax revenue, you can take after tax dollars, meaning money that you've already paid taxes on. You can currently put it into a Roth IRA or a Roth 401k. You can grow that money. And then when you take it out, you don't owe taxes on it because you paid taxes now. So the government previously said you either pay taxes on it now and you don't pay taxes on it later, or you don't pay taxes on it now and you do pay taxes on it later. What they're realizing is the thing that smart investors have been realizing for a decade is that, oh, hey, by the way, taxes are definitely going to be higher in the future. So we want to put our money in Roth IRAs and Roth 401ks and Roth self-directed employment programs and pension funds. And we'll pay the taxes on it now because we have 10, 20, 30, 40 years for that money to grow. I know taxes are going to be higher and I don't want to pay taxes on that money when I take it out. They're eliminating a lot of the ability to do that. And then there's a bunch of other business write-offs where if you own a business, basically you're getting screwed. So, it's like, again, Republicans are hypocrites in the fact that they say they want to be fiscally responsible and then they frequently are not. But Democrats are irresponsible, in my opinion, in the fact that they have this air of moral and intellectual and policy superiority where they think, no, the answer is always more, because we know where to spend your money better than you can. And there's actually a new policy coming out. We'll talk about this on the next show about ETF taxes, which this is crazy. And then let's get to the last level of craziness. There's a new proposal, and I checked this on PolitiFact, which they said the way that this is advertised is mostly false. I don't trust PolitiFact. So what did I do? I went to the actual underlying bill in the Department of Treasury, which is funny because PolitiFact says, hey, this is not correct, blah, 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 blah. And then they actually point to the actual proposal and you can read about this. All right. So again, this is where I get so frustrated with people, right? Because you can go to an article about this thing we're going to talk about, which is kind of considered the $600 IRS plan through the Biden policy. You can read something on InfoWars, which is Alex Jones, super crazy right-wing conspiracy theory. Then you can compare that to what's like on PolitiFact or Snopes. But all of this stuff is biased, right? So just go to the underlying document. It's not that hard. You can go to the Treasury Department, you can go to Congress, you can go to the White House. You can find the source document for all this stuff. And instead of reading an editorial of a fact check about an opinion, about an interpretation of a document, just go to it yourself. All right. So there's this thing called the Bank Secrecy Act. And the Bank Secrecy Act, basically, I'm going to paraphrase because it's been manipulated over a long time. I was very familiar with this when I was in the banking world. Basically, it says that a bank has to report any suspicious activity over $10,000. So in the past, up until this bill passes, which is probably going to pass, I think it actually just got voted a yes vote in the House of Representatives. The government and the IRS cannot spy on your bank accounts, right? If they have a reason to audit you, they can ask to look at your bank accounts and they can even I don't know if the correct term is subpoena, but they can force you to show their bank accounts. But the government can't just go into your Bank of America account and be like, I wonder if this woman shops at Victoria's Secret, or I wonder if this guy donates to the Trump campaign or the Hillary Clinton campaign. There was bank secrecy laws where the government basically just couldn't raid your financial records. Okay. However, there was this thing called the suspicious activity reports that all lenders, I had to take a training on this every year when I worked at the bank, even though I wasn't a teller, of that if somebody is bringing in more than $10,000 cash at a time, or they're trying to structure their transactions where they get $10,000 cash in or out of their account over the course of a 24 hours, the bank has to report that individual to the government, called Suspicious Activities Report. And it's the Bank Secrecy Act that requires banks to do certain reporting on certain types of accounts that could be red flags for money laundering. Now, I'll tell you, a bunch of think tanks, the Heritage Foundation, the Rand Institute, which I think is the Rand Corporation, the Tax Foundation, all these freedom foundations, they've analyzed these suspicious activity reports and the auditing that the IRS does, and something like less than 2% of these suspicious activity reports ever come back with something that's like actually needs to be investigated, or something where somebody was sheltering taxes or laundering money or tax fraud, because there's been times when I had to pay a bunch of contractors where I went and got $10,000 cash. So there was this kind of gray area where if it was over $10,000 in and out of our account, the banks had a responsibility to report to the government. And actually, I have a funny story about this. One of my clients is a contractor, and he also plays high stakes poker. His choice, his money. And one day he gets a call from Bank of America, and they're like, "Hey, Mr. So-and-so, we need you to come close out your business accounts and close out your personal accounts. And you have 48 hours to do that, or we're just going to send you cashier's checks for the couple $100,000 that are in your personal and business accounts." And he's like, "Wait a minute, I've been a client of yours for 22 years. You're closing my accounts? Did I bounce a check? Did I have a vendor, commit fraud or send me Venmo payments from a fraudulent account or something?" They're like, no. We just see that you frequently take $10,000 in and out of your account, and so we're closing your account. He's like, "Yeah, no, I get it. You guys have to fill out that suspicious activity report, but I do a lot of on-site jobs where I'm paying contractors and vendors and pool repair guys and landscapers and whatnot. I'm paying them by cash, or I'm going and buying lumber cash, or frankly, I play high stakes poker. So there's frequently where I need $20,000 in cash, and then the very next day I'll deposit $27,000 cash if I win and $17,000 cash if I lose." And they're like, "Yeah, sorry, we're closing your accounts." So finally, after escalating it, because he had a private banker, since he had his mortgage with them, a line of credit with them, a business account with them, a personal relationship with them for 21 years, credit cards with them, the whole 9 yards, he finally got a personal banker to get somebody from the compliance department on the phone. And they're like, "Hey, man, off the record, here's what I'll tell you. There's nothing wrong with your account. Like, you're clearly not laundering money. If you were laundering money or you were doing something illegal, we wouldn't just be closing your account. There would be a federal agent or an IRS agent at your door investigating what's going on, and they would be putting you through, a body cavity search and auditing your financials, or they would be hauling you off to jail." It's like, the reality is once we flag one of these accounts where there's just too much reporting going on, the government makes it so egregiously difficult to comply with their reporting, and they make it so expensive, and it's such a huge burden on the bank. And God forbid you ever did launder money and there was a pattern of you previously taking out $10,000 in and out of your account, it would just be a regulatory nightmare for us. So we're just making the business decision to close your account because it's too much headache for us to regulate it. And he's like, "Well, that sucks. It's horrible, but hey, thanks for your honesty." And that was kind of his example, his story of what happens when this Bank Secrecy Act. So what's kind of going around social media, and it's being misrepresented by both sides, is that there's a new rule where if your account, and I'm not joking on this, if your account has more than $600 a year of inflows and outflows, you are now subject to this Bank Secrecy Act, where the banking institution or Venmo or PayPal has to transmit that data to the federal government. And at first, I couldn't believe that. I'm like, there's no way in today's age where, I frequently pay Chris more than $600 for a string of episodes that he edited. There's no way the government is going to put the banks under this regulatory scrutiny of reporting anything that's $600. So I went to the revenue proposal, right? And you just go Command F and you look for 600. And let's see here, 600, 3,600, 1,600, 3,600, 600. Okay, proposal. The proposal would create a comprehensive financial account information reporting regime. Anytime the government's using the term regime, you should be scared. Red flag should already be going off. Financial institutions would report data on financial accounts in an information return, meaning information return from the financial institution to the government. The annual return will report gross inflows and outflows with a breakdown of physical cash, transactions with a foreign account, transfers to and transfers from another account with the same owner. This requirement would only apply to all business and personal accounts from financial institutions, including banks, loans, investment accounts, with the exceptions below a low de minimis gross flow threshold of $600 or fair market value of $600. So basically, what they're saying is that any checking, investment, or banking transfer account that has more than a $600 balance or fair market value annually, or that has inflows, outflows, transfers, or financial payments of more than $600 annually will be transmitted to the federal government. So basically everybody. So the government is saying, well, now we are going to take any account worth more than $600 or any account that has more than $600 transfer in or out, and we want to audit that account, or we want to have the ability to audit that account. And banks, we're going to basically make you do our dirty work and turn in anybody who has money in the bank just in case they're not paying taxes. And you can see where this goes pretty quickly, right? You can see where this is. Oh, okay, great. Well, let's send all this information to the government and the IRS. They'll cross-check it with, their tax records, and they'll say, hey, John Smith, we see that you only paid taxes on $20,000 of income, but it looks like you had $30,000 of inflows and outflows from your checking account. Well, yeah, I Venmo'd my kid $500 and I took in $700 of Venmo payments because we went out for a fancy dinner and everybody at the table just Venmo'd me because I picked it up with my credit card. Boom, audit. Or more accurately, it's not going to be an audit. It's going to be this scary letter that says, we've assumed or we've assessed that you made X amount of dollars. Please pay us. I've gotten these letters before where the federal government has sent a letter. The IRS has sent a letter to me that says, hey, your income was X. We kind of think your income was Y, and we'd like $2,700 from you. And I call my accountant, and my accountant says, hey, man, you pay me $5,000 a year to file your taxes for your personal taxes and your coaching business and your podcast business. By the time we argue all of this, and God forbid they want to send an IRS agent down to actually do an audit, it's going to be more of a pain in the ass than you want. I can fight this for you. I know that we're right. And it's just cheaper for you to pay off the mob called the IRS and send them the $2,700. So what do? I send them $2,700, right? And guess how many people are going to start getting these letters and how many people are going to run into a nightmare situation where because of their inflow and outflow of cash, they're going to be on the IRS's radar, even though maybe they don't have a lot of profit to pay taxes on. So let's say, for example, you sell, what's a good example that's around here? Oh, I have these wooden boards up on my wall that have certain sayings like nobody fails to plan, or nobody plans to fail, they just fail to plan, and retain what you obtain. And a lot of kind of like coaching maxims and life maxims to live by. I buy these on Etsy from this same guy. And he charges me about $50 for these placards. But of course, the placards probably cost him $20 in wood, $5 in material, $10 in time, $5 in shipping, and then he probably makes a $10 profit. Well, what the IRS is going to see is that through, I don't know if I pay him by the Venmo or PayPal, probably PayPal. Through PayPal, he's getting $50. And I've ordered dozens of these signs as gifts and things for my office and things for my podcast studio. So, he's going to show from Scott Groves hundreds, if not thousands of dollars of revenue and influx that his banking institution now has to report to the IRS. But on that money, he probably only has, out of $1,000, maybe $100 or a couple $100 worth of profit. But guess what? Now the IRS is going to be crawling up his ass because he shows a lot of inflow and outflow of banking. And that's if we're giving them the most genuine interpretation of the law. What's more scary to me is why does the bank need to know, or why does the government need to know where I spend all my money? You can see with where we're going in our current last 18 months of the government looking more and more totalitarian. Do you really want, if you voted for Trump, do you really want the Biden administration to be able to scrutinize your banking records without just cause or without an actual audit that's spurred on by you not paying taxes? Or if you're a Biden supporter and all of a sudden Trump is president in 2024, do you trust the IRS and a Trump-led? If you're a Biden voter and Trump becomes president in 2024, do you trust a Trump-led government to have access to all your bank statements and know what political candidates you donated to and know where you spend your money and know kind of all the dark secrets about your bank statements? I can tell you, as somebody who's doing loans for the last 21 years and has to look at 2 months of bank statements for every single client I do a loan for, I can tell you that I see a lot of skeletons in the closet by evaluating people's bank statements. Like, I know if women are buying their lingerie at Target or Victoria's Secrets. I know if guys are subscribing to OnlyFans or Pornhub. I know if people are generally unhealthy, because when I'm looking at their bank statements, checking for large deposits that I'm going to need to source, I know if they're eating at McDonald's every day, right? I know if somebody's fiscally irresponsible because they don't have 2 pennies to rub together and they're getting 100% of their down payment from their family and gift funds, but somehow they spend $37 a day at Starbucks, right? Having access to 100% of somebody's banking records is a really dangerous precedent to set. And I'll tell you, the way this came across my computer was not because it's being talked about a lot in political spheres, is not because the libertarians or the ACLU or these organizations and these political parties that are supposed to freak out of this kind of shit are adequately freaking out, which I don't think they are. This came up to me at my jiu-jitsu class. I was waiting to start a jiu-jitsu class. There was about 20 or 30 of us waiting there stretching out. And one of the jiu-jitsu instructors, who's a badass, was giving a private lesson to some lady and her kids. And after the lesson, he told her, he was like, hey, man, this is kind of weird, but you usually Venmo me, whatever it was, $75 after each lesson for you and your 2 kids. I really don't want to be taking Venmo or Zelle or PayPal anymore for payments. Can we just every 4 or 5 lessons settle up in cash? And she was like, yeah, sure. Why? And he's like, well, I don't know if you heard about that new Biden thing, but any $600 of income that's coming in is going to be potentially audited, and it's a big headache. And he's like, I don't make enough money every year to file taxes because I'm basically a starving student in college who teaches jiu-jitsu on the side. I don't make the minimum, I think it's $17,000 a year, to where you have to file taxes. He's like, but frankly, I just don't want to be on their radar. And I don't want to have a bank account that has more than $600 in it because I just don't want the government breathing down my ass. And I was like, that can't be true. So I pulled him aside afterwards. I'm like, is this a real thing? Like, or are you just talking shit because you want to get taxed? You want to get to cash? And he's like, no, it's a real thing, man. Go read about it. Like, they're going to start auditing or at least having the financial records of anybody who makes more than $600 a year. He's like, and I can't really deal with that, right? Now, in some ways, part of me who says, hey, I really hate when I meet somebody who's dodging taxes, and I can see that on their tax returns. And then, they're also the type of person that complains on social media about like not paying their fair share. Part of me, the vindictive side of me, is like, well, I don't have anything to hide. I pay my fair share of taxes. I pay an absurd amount of taxes, in my opinion. So, those people that are hiding money, cool. Let the IRS go after them. That's what the vindictive, more progressive side of Scott is saying. Like, more taxes. Who cares? Let them pay their fair share. But the libertarian part of me is saying, like, man, nothing good can come of the government having access to 100% of your banking records without just cause. It's pretty scary. I'm not sure how it's going to shake out. I'm pretty disgusted by the 100 or so Republican representatives that voted for this, because this did just pass on the House floor. I think, 200 and something Democrats voted for it, 100 and something Republicans voted for it. So it's going to become the law. I'm sure it will be challenged in court. It'll be interesting to see how this all shakes out. And, yeah, should be interesting. I even tried to read this article on the case for robust attack on tax gap. And, you know, they're arguing that something like $600 billion in revenue, the tax gap is basically what the Department of Treasury and the IRS thinks they should be able to collect in taxes and what they can prove. And their argument is like, there's so many people just avoiding filing their tax returns and cheating the government by saying they make 40,000 and they really make 90,000, that by, if we could just monitor their bank accounts, then, you know, we'll figure this out and everybody will pay their fair share. But when's the last time the government said, well, if we could just do this one thing, everything would be okay? And then it's never okay because they just want to consolidate more and more power and take more and more money and more taxes. But I digress.